Hi, good evening. Welcome to Business Live. Coming up tonight, 6-year bond oversubscribed by a little over 258% as government accepts all bids worth 2.87 billion cedis. Also coming up tonight, a warning that the second wave of COVID-19 could destabilize the economy and erode recent marginal gains if not well contained. Also tonight, President Akufo-Addo releases a list of ministers for his second term. We will be gauging the views of the business community to some of the appointments. Thanks for making a date once again. My name is Daryl Carl. Details right after this. Welcome back. Tonight, the 6-year cedi bond has been oversubscribed by a little over 258%. This signals rising investor confidence in the economy following successful elections last month. There's more in this report.
Joy Business understands that government accepted all the bids worth 2.87 billion cedis because it needs money to close the fiscal space. The offer also received strong bids from both local and international investors, with the pricing aligned to the secondary market. And many analysts have described this offer as one of the successful in recent times amid COVID-19. If this trend continues, then the economy will be witnessing a sharp recovery compared with its peers on the African continent. The coupon or interest rate of 19.25% was 0.25% lower than previous rate issued 6 months ago. The sizable amount raised is expected to help government create sufficient buffer ahead of frequent upcoming maturities in March this year. Majority of the funds raised will be used to settle maturing debts, whilst few will be used to finance government business. Last month, the government accepted all bids worth a little over 176.4 million cedis for the 20-year treasury bond and 1.66 billion cedis for the 3-year bond.
Well, joining me tonight, Dr. Williams Pepra, who is the head of finance at Valley View University, and economist Dr. Said Boakye to discuss this latest news about our 6-year cedi bond. I'll begin with you, I believe, Dr. Williams Pepra. What you make of this? Very impressive.
Yes, I think it's, as you just said, it's very impressive. And it brings confidence into the economy. I'm sure the international community, following what happened after our election, have seen that Ghana is now of age. And this bond rate, if you look at the over 258%, means that they have confidence in the Ghanaian system, especially our governance and then also the financial sector.
Dr. Boakye, you think same?
I agree, but with a caveat, in a sense that, sure, the financial market continues to feel that they can lend to the country. But on the other hand, the borrowing is being too much, and we cannot depend upon it forever. The news will be better if you are reading that the government has found means to raise revenue, or if it is that the government has found means to cut down spending, then it will be indeed a good news. But then just being able to borrow more is not necessarily good news. However, the financial market continuing to put their monies into Ghana is to some extent a good thing.
Okay, because I was going to ask how we should situate this in terms of our debts. Now, while this signals rising investor confidence in our economy, Moody's, for instance, is warning we may end up spending 50% of our revenue to pay for interest on loans. Dr. Boakye.
Sure. In fact, as of 2018, Ghana was spending about 33% of all its revenue, including even grants, to pay interest alone. And let me tell you, Ghana was number 3 in the world. Number one being Lebanon, number two being, I think, Sri Lanka, and Ghana was number three. By the end of 2020, based on the budget the government brought, Ghana would be spending about 48% of all its revenue to pay for interest. So it is continuing, and I believe Lebanon may be still number one, and Ghana may be number two now. If this thing continues, by the end of this year, sure, Ghana will be spending not less than 50% of its revenue to settle interest payment alone. Amortization hasn't come yet. So it is something scary. While, after all, in the short run, you need the country to run, and financial markets still continue to lend to Ghana is something somewhat good. This cannot continue forever.
Well, there are some who think that for now we have no option but to borrow, but they're saying we should diversify when it comes to our borrowing options. You agree with that, Dr. Pepra?
I think Doc has made a very good point, but what I want to say is that government also needs money to run its business. There are two options for government now, either to increase the taxes so that revenue will increase, or you borrow from outside. Ghanaians, if you listen to what happened in the past and the government, the NPP government policy, their aim is to reduce taxes. So their option has been to go to the international market. That is why we've seen a sharp rise, and also the warning coming from these financial institutions. All that we are saying is that government must be disciplined in its spending. But I am foreseeing that 2021 will be a major challenge, because the president in his speech noted that they are going to continue the road infrastructure project, which means that government must look for more money from somewhere to run this policy. And it's something which is very worrying for us, and where I sit as a financial analyst, that the government must be careful, though there are pressures from institutions in terms of development, but this funding approach must be looked at. I also know, you notice that last year government tried to find a balance between borrowing from international market and local the Ghanaian market, whereby doing about 50-50 of the borrowing. This government is doing this also to prevent the clouding effect. Also, we noticed that during COVID-19 the pandemic, international firms are also looking for countries with good plans or good investment strategies to invest. And Ghana has been found to be one. That is why you also see the oversubscription. There are some confidence that Ghana will be able to generate more revenue from the oil fields that we have identified. And also, let me put it, our commodity that we have. If the government is able to look for more commodities in terms of gold, cocoa, and the oil, there are other finds that they have looked at. It will be able to bring in revenue with our foreign currency to be able to pay these debts. So this is a major issue, but government must look at it very well.
I guess the question is, where do you look for the money then? I mean, when you keep borrowing, you make the point about the fact that, yes, we need the money at this point, but the difficulty is where we are going to get the money to make up for the funds that we sort of borrow from these lenders. Where do we get the money from, Dr. Boakye?
Oh, where do we get the money from? We get the money from two sources, broadly. One, cutting down your spending. When you cut down your spending, you make savings. But to be frank with you, cutting down spending has been a little bit difficult, in the sense that the country is lumped in so much, because if you add amount of money the government spends on compensation of employees, amount of money the government uses to service its debt, and amount of money the government uses to transfer to statutory funds. When you do this, there's nothing virtually left for anything. Meanwhile, the government has, as Doc said, the government has promised spending on infrastructure and others. So cutting down on spending to make savings is a little bit difficult, but something can be done. We see a country that is cash-strapped like Ghana keeps on giving monies away to people in the name of social intervention. Social intervention broadly cannot be criticized if it is targeted to the poor who actually need them. But if you have a policy like free SSHs, whereby people who can afford to pay their wards fees from their own pockets are still being helped by the government through borrowed funds, then it becomes something that does not make sense. So some of the social intervention programs could be looked at again for savings to be made. Then, of course, the second source broadly is increasing revenue. But you have to be careful. You know, whenever we hear increased revenue, what comes to mind of people is that increased taxes. Why again to do increased taxes? It is the same government that introduced a policy of shifting from taxation to production, which I agree. Over-taxation is not what is right for this country. So we cannot increase taxes. Now, usually what comes to mind also is broadening the tax base. When you hear the word broadening the tax base, what comes to mind also is the informal sector. Let me tell you, not much can be gotten from the informal sector, in the sense that many actors in that sector earn incomes that are largely not taxable to begin with. So how do you generate so much money from the informal sector? In fact, what IFS has identified and the government should tackle seriously is the extractive sector, the mining subsector, and the oil subsector. If you compare the amount of monies government generate from these subsectors to other developing countries, you realize that the country is falling far below the peers. Because of that, we can learn from our peers how they generate monies from these sectors and be able to generate more to match at least their average, so that on revenue side, the country can generate, have more revenue. So that the borrowing can be minimized. That is the way forward. In fact, that is what our studies have shown us. The way forward is that at least you have to be able to match our peers in terms of money generation from
and I guess that government recognizes that it has to cut down on spending. That is why the president, for instance, cut down on the list of ministers as he released those ministerial appointments. So I wanted to talk about that. The fact that he retained Ken Ofori-Atta as finance minister. Dr. Pepa, good move?
Yeah, I think it's a good move for the government because it's a short continuity. And also, we know the strategies of Ken already. So the country will not be deviating from the last 4 years' strategies. It brings some confidence also to the international market that because Ken is known there. So it puts the country among the country should put financial ministers in the world. Ken is known to have taken the country through a difficult time, which is the COVID period. So we are hoping that when the bright time is, we are expecting the future to be bright, we'll be able to come out with strategies and financial plans or budgets that will help us to take us through. So it's something good for the government, and we are hoping that. But where the caution is that we don't know the number of ministers the government is going to appoint as deputy financial ministers. It's also an area government must look at in terms of overspending. Also, there's a lot of directors under the Ministry of Finance. Can the government look at it to merge some of the offices to reduce the cost in spending at the Ministry of Finance? So Ken must first start from home. Make sure to reduce the number of finance directors and deputy finance ministers and other people appointed, government appointees working with him. In the last 4 years, we saw that he appointed so many directors or officers under the Ministry of Finance. Some of them were earning the same as deputy finance ministers. So government must look at that, and we are expecting that when Ken comes, we will not do the same mistakes as that happened last 4 years.
Dr. Said, how would you rate the performance of Ken Ofori-Atta over the past 4 years, what would be his greatest challenge in the second term?
Tough question. I usually don't want to get personal with the one occupying that position. But what I can say is that for the first 2 years, I was impressed with the ability to stabilize the economy. Of course, we needed foreign exchange to be able to stabilize. After all, domestic inflation is highly linked to the external sector because of what we call imported inflation. So I was impressed for the first 2 years. But the third and fourth years, what I realized was that, the strategy continued to be the same, which was meant to be for short term, get foreign currency to stabilize the economy. But this strategy was continued throughout the whole period. For that matter, there was so much borrowing. It is like you have a very big wound and you are not healing the wound. You are only trying to put medicine to reduce the pain. And that is what has led us to this situation that Moody and other rating agencies are now getting worried about. You see, the strategy of borrowing and borrowing and borrowing to stabilize is going to bite this country in the long term. So what I'm interested in is the future, whether it is Mr. Ofori-Atta or any other person in charge.
Right.
Think outside the box, generate revenue, cut down spending to make savings so that we can minimize borrowing. These short-term fixes that have been carried for quite a long time, get in foreign currency to stabilize the situation is, in fact, being so much of a burden to the country.
All right. And Dr. Pepa, you would have the final word. COVID-19 is still ravaging economies around the world. That's a tough task for the finance minister designate, isn't it?
Yes, I think it's a very difficult period for us as a country and also for the finance minister. The World Bank and other agencies brought us some funds to support us. So I'm expecting his budget for 2021 not to be something that will be bringing in a lot of development, but to support, to bring in social support to the people or people in Ghana. It's a major issue that I think Ken must look at in his next budget that he presents to us in March.
All right. I want to thank you both for making time to speak to us on Business Live. Dr. Said Boakye with the IFS and the head of finance of Valley View University, Dr. Williams Pepa. Grateful for your time tonight. Now, more reactions to ministerial appointments. The Ghana National Chamber of Commerce and Industry says it expects Trade Minister designate Alan KYEREMATEN to ensure Ghana benefits from the Continental Free Trade Agreement. Chief Executive Mark Bedu-Abuaje says that should be Mr. KYEREMATEN's priority. He has been reacting to President Akufo-Addo's decision to retain him as Trade Minister.
Yes, I'm done. Thank you very much.
Nana Danko has retained Honorable Alan KYEREMATEN as the Minister of Trade and Industry for the next 4 years. In fact, Alan's understanding of private sector issues and also trade and trade-related issues is just exceptional. In fact, we have worked with him for a very long time, and his open door policy is always ready and willing to listen to us. Together and collectively, we have resolved a number of issues. And as you rightly said, some of the policies that he has introduced, especially the Business Enabling Environment Program, which sought to improve the business environment, has really helped the private sector. And also the business regulatory reforms, which sought to also improve the regulatory reforms, the regulations that affect the private sector in Ghana. For me, they are all exceptional. So we are super excited. We are happy that we are going to work with Alan for the next 4 years. So on behalf of the Council of the Ghana National Chamber of Commerce and Industry, and also on behalf of the entire private sector, I would like to say a big thank you to His Excellency Nana Addo for retaining Alan KYEREMATEN, and also to congratulate Honorable Alan KYEREMATEN and also assure him that the Ghana National Chamber of Commerce and Industry is ready and willing to work with him to ensure that all the good work that he has started with the business environment will come to pass, and the private sector in Ghana will be the winner.
Well, former Minister of Business Development, Dr. Ibrahim Awal, heads to the Tourism Ministry. President of the Ghana Hotels Association, Dr. Edward Akanyamika Jr., is asking that he prioritizes policies outlined in the tourism bill.
Look at his profile with experience in marketing. Don't forget he was the Marketing Man of the Year in 2009. His expertise in business development, journalism, and all that. He is what I think the industry needs at this crucial time. Because of COVID-19, we've had challenges with international visits, and this is the time to push for domestic tourism. And that will involve a lot of marketing. That will involve a lot of strategic positioning of businesses. And that's where the business development also comes in. And with his link with the media, we need the media in marketing Ghana as a destination.
Now, Face Solutions says Ghana's economy grew by 1.8% last year despite the impact of COVID-19. This is not far from the 2% forecast by the director of the Institute of Statistical, Social and Economic Research, Professor Peter Korte. The Ghana Statistical Service is expected to soon release the provisional full-year data on the performance of the economy last year. But in its 2021 Sub-Saharan Africa Outlook report, the research arm of ratings agency Fitch said Ghana's economy was one of the outperformers in the world last year. William Atwell is Senior Country Risk Analyst.
Similarly, in Ghana, expecting a 4.8% real GDP growth. Neither of these markets went into recession, according to our estimates last year, despite the COVID-19 pandemic. So they are growing off a relatively strong base, and we expect pretty robust rebounds in terms of private consumption, investment in the coming quarters. So fairly buoyant in both cases. Also supporting the outlook is relatively stable macroeconomic conditions.
Meanwhile, the second wave of COVID-19 could destabilize the economy and erode recent marginal gains if not well contained. That's a warning from economist Eric Osei-Sibe. Active COVID-19 cases have seen a sudden surge in recent weeks, reaching over 2,000 earlier this week, with the death toll hitting new levels. Now, speaking on PM Express Business Edition, Professor Osei-Sibe said the situation calls for some drastic measures.
On the economy, everything coming to a halt. Our economic, the value chain of production actually curtailed. The businesses folded up. People were, sacked from their work, or work did not go on. So many people have to lose their job. They have to lose their income. Government revenue suffered. Government has to ramp up its expenditure on social spending, on life support, a stimulus package for businesses and others. That really took us away from our fiscal targets, likely to end in the year at about 11.9%. In fact, in some other circles, it has been projected that for the year 2020, our fiscal deficit will be around 12.4 thereabout, and that is huge. It also explains why debt stock is also increasing, and currently we are around about 74% of GDP. And so if we are going to experience another height in this pandemic, you could imagine a devastating effect that would have. Even indirectly, what is happening in the developed countries like US, like Europe, which are our key development partners and export partners. If it continues as the way it is going, it is also going to have effect on our economy, because once their domestic economy ground to a halt and they are unable to produce, maintain the supply chain and the production sources and the consumption fall, definitely we're going to have impact because it's also going to lead to our exports falling, and our projected growth will not be realized for the year 2021.
All right, on that note, we end Business Live tonight. Thanks for watching, everyone. Enjoy your weekend.